What's the big deal when credit unions make business loans to their members? Hi, I'm Stephanie Morton, and today we'll take a look at a brief history of member business lending at credit unions, as well as recent changes that may impact those who manage credit unions and their members. Up until 1998, there was no cap on business lending for credit unions. But in response to a U.S. Supreme Court ruling that would have forced millions of credit union members to leave their credit unions, Congress passed a measure called the Credit Union Membership Access Act that allowed credit unions to have more than one common bond of membership. However, to get the measure passed, some compromises were made. One of them was a cap on business lending. This cap limited most credit unions to lending no more than 12.25% of their assets to small businesses. H.R. 1151 was signed by President Clinton in July 1998 and gave credit unions up to 3 years to get under the cap. 18 years later, in 2016, NCUA approved a final member business lending rule that amends Part 723 of the NCUA's rules regarding the ability of federally insured credit unions to make member business loans. This rule eliminated the personal guarantee requirement for member business loans. It lifted limits on construction and development loans, and it affirmed that non-member participations do not count against the statutory member business lending cap of 12.25%. In addition, the 2016 rule made a distinction between what is considered a commercial loan versus what is considered a member business loan, which were previously synonymous. These distinctions were then used to carve out exemptions for commercial loans that do not count against the cap. The banking industry sued the NCUA challenging the 2016 rule, but the case was dismissed. Fast forward to 2018. President Trump signed S-2155 Economic Growth, Regulatory Relief, and Consumer Protection Act. This act didn't raise the 12.25% cap per se, but it did create one significant exclusion. The act excluded 1 to 4 family dwellings that are not the primary residence of the member from the member business lending cap. This means credit unions may offer their members real estate loans on the members' 1 to 4 family unit investment properties without worrying about the cap. Other changes impacted the way call reports are handled. What's next for member business lending for credit unions remains to be seen. There are measures being considered that would give the NCUA greater flexibility in setting loan maturity limits greater than the current 15-year limit set by the Federal Credit Union Act. Another measure would exclude loans made to veterans from the member business lending cap. The NCUA is quick to remind credit unions that its risk assessment and management for member business loans should be, as it is for all loans, appropriate for the type of loans and specific risks associated with them, and that such lending should be approached accordingly. I'm Stephanie Morton for RiskWatch. Thanks for watching.